Good morning, all. So markets are down here a bit. Excuse me. We got the Dow futures down about 115. S&Ps are down 14 and a quarter. Nasdaq down 50 and a quarter. And so any news, price movement in whether it's the broader markets or a stock of interest, you always put it in the perspective of where does that put those current prices in relation to the past or recent history? And, so I guess the news had come out about Korea, again, while the futures were down a little bit because there's this gap down here from the closing prices at the end of the day. And so far, it's really just more of the same, no big deal. Held made this low. Here was the big down day. Rallied right back up to the top of it. Incredible. Big down day. Didn't quite get back up to the top, but further than, the norm of around 30 to 50%. Nothing to do with Fibonacci's, just generalization of the week stay in the lower third and the lower half of a wide range bar down. The idea being that the wide range bar down creates a price void, right? No resistance. So when it rallies back up, it stays down here and it creates resistance and then goes back down again. So anyway, so last Tuesday we had this relatively large green day up, which then creates another price void inside, and wide range bars are made up of some momentum moves, rapid moves that leave little resistance below. Right? That's what creates the price void. And now prices have retraced all the way back down to the bottom of it. So, you've got a yo-yo type of a market, a confused market, whereas you have, powerful moves to the downside that are negated. Powerful move to the downside, about 3/4 of the way negated. And powerful move up, 100% negated. In reality, or factually, so far, we've got a bottoming type of action here with a topping type of price action, and it's a battle what's going on between buyers and sellers within this little playground area, if you will. We've got the weeklies still in an uptrend. However, as I've explained in a prior video, momentum has slowed. Look at the speed of which prices moved here, and then here, still good but slows down. And then on this high, it immediately stalls after taking out the high, and you've got these topping tails that are forming here. However, still above support. So stuck between support and resistance in multiple time frames. And back to yesterday's video, basically stay away from the broader markets or trying to trade this. Of course, unless you're a intraday trader, you can pick your spots. Part of your trading plan is to trade whatever the patterns are. So you could take this 30-minute chart knowing, hey, your major support on the daily is here and resistance up here. And you trade this trend on the 30, and within these moves, right, you can trade the 5 or the 2 minute in the direction of these moves on the 30. That is a very viable trading plan for an intraday trader, even in this choppy daily chart. Okay. S&Ps coming back down toward this major support area. We'll see if it holds or whether we want to break lower into the void, and then, kind of that's what I would like to see. Get a larger move to the downside, and then our internals lining up for a, much greater, highly profitable position after a deeper correction. And there's the Dow, pretty much the same. It had shown relative strength. There was that last gas move where the rest of the markets did not participate, and that is, historically just another sign of the end of a move or a beginning of some type of a correction coming. When the Dow runs by itself, nothing follows. Transports held up yesterday. And there was that breakdown that happened last week, still below the 200 and this resistance here. We'll see if it wants to roll over. Just doing nothing here this morning. Airlines are deeply oversold. Maybe they can continue to bounce. And just looking at the Qs and spiders, so you're going to get a gap down here this morning below this area. And we'll see if it holds. And as far as our spider trade go, our income trade on the weekly options trader, this is just perfect, as we had our spread that we sold up above this area here. So with this gap down today, unless there's some miracle rally that pushes prices back up here, which doesn't seem feasible, those options will expire worthless as well, and we collect that money at the end of the week. Gold beginning to shine here, right? Finally getting through this resistance area here, and it's got some room to run. So you take a look at gold stocks or GDXJ, which we can take a look at. Doesn't always look like gold, but it actually, in some ways, it actually looks better because the move is just getting started. And look at the weekly chart here. So NEM, which is one of our positions, that looks great. And we could take a look at AXP. Not looking nearly anything like it. And this one has just been an outperformer, and wish we had gotten this. But, these type of trends typically are going to continue. Gold and gold stocks looking good here. And oil, just grinding, chopping, maybe heading back down to the bottom of the range here. And, kind of getting to an inflection point. So we're going to want to see whether it holds this little shelf of consolidation right here that it created. Or if this comes back down here again, how many times can it get down there and actually hold? Or will this time, if it's down there, result in a move back down? And that's going to get, a lot of markets and traders' attention. If oil starts to break down below there. So that's something to keep an eye on as well. All right, guys, have a great trading day. We talk tomorrow.